Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for November 1st, 2021. So, not including this last year, but the previous 10 years, we've run a series of live trading workshop and research weekends. And we ran that where folks came out for the research weekend and we reviewed trading systems and shared ideas. We had peer reviewed the papers and then did brainstorm sessions Friday and Saturday and Sunday. And then Sunday evening, we converted to a operational trading where we were going to put those plans into effect and then spend anywhere from 4 to 5 days of the next week just trading together in a large room and sprinkling lessons learned and after action reviews amongst those recorded sessions. So I made a bunch of those available to various clients over the years, and had folks that were happy to have those each year for anywhere for $2,000 to $3,000 just for the recordings of the sessions. Just going back over those things in preparation for our upcoming research weekend, and that stuff is still right on target and very, very good. It was live trading in many cases, bar by bar, and it showed us applying these techniques in real time on camera in public. And somebody asked me how we had done, and so I compiled the results from those publicly traded sessions, and these are the numbers. We had a total of 1,467 trades documented. The best performing trade we had was 11.2 R. We had 2 losing trades that were 2R. Those were there were 2 trades that were minus 2R. Those were both part of a like a turbo swing that we'd held overnight and gave us a minus 2R twice. And then nothing else was worse than 1R. We had 876 wins with an average position sizing R of 1.04. We had 221 scratches in which it netted out to 0. Now, in some cases, these were like plus 0.2 and minus 0.2, and the average of all those turned out to be 0. So we just counted it as the average was 0 for those 221 trades. And then we had 370 losses for 25% of it. And the average loss on those was minus 0.4. So if you put those scratches and losses together, what you end up having is 60% win rate, 40% loss rate. Now, if you dilute that, you get the average loss is about 0.3. So what you have is a system that collectively was winning 3 times out of 5, and the average win to the average loss was 3-1 over 1,500 trades over probably about an 8-year period. The histogram looked like this, that between -1 and +2, the system was positive expectancy. Only those two trades worse than -1. And then we had a fat right tail that offered a number of trades better than 2-1. So those are the 3 things that I look for in a histogram. The first thing is controlled left-hand curve. Second, a normal looking histogram between -1 and +2, and then 3, the possibility of fat right tails. Our rolling expectancy, once it's stabilized here around 0.4, about 4 or 5 years ago, we started getting pretty good and slowly began improving to a rolling expectancy of 0.5. And then the cumulative R look like this. So I'm going to put all of those together into one workshop and make those available. Actually, I should say 2 workshops. One workshop will be just the live trades with all the little lessons that we learned along the way. And these included the nightly after action reviews and the preparation for the next day's trade. So it was like, it wasn't just the trades, but it was also the planning and the preparation. And then I'm going to compile all of the research weekends into one study package as well. I'm going to offer those to the team. I guess I should be, yeah, I guess I'm recording. Yeah, I got the recording on, Pete. Thanks. I intend to have that done before Thanksgiving as part of our updated research weekend, and we're going to do that virtually this year. So working with some students today. This is the trivium of ancient Greece, the classical liberal arts, where you have the grammar or the knowledge is the construction of knowledge into categories, and that logic is the manipulation of those pieces of knowledge in a logical and consistent, rational manner. The rhetoric is the communication of that knowledge to others. And when you have all 3 of those in the trivium represented, you can say that you are approaching true learning or mastery of that fundamental knowledge. When I think of applied thinking, I consider what situation we're in. What does the situation demand? And my job is to come up with the right kind of thinking that's going to lead to right action, driven by the needs of the situation. And that right action, driven by the right thing. That right thinking could be, in some cases, no thinking, in which case we are sense and respond. And sometimes what we need is professional thinking, which is choosing from among a limited number of courses of action that are appropriate based on lots of repetition and expert knowledge. And then sometimes what we need is creative thinking to get out of the box of professional thinking. And so when you look at that as a learning system, what we can say is that that situation that led to the right thinking into the right kind of action that we wanted. We hope it's the right action. When we are applying critical thinking, we can think of that as analyzing the connection between the situation as we assessed it, the thinking about the situation that we did, and then being critical about the actions that we took as a result of the thinking that we did, based on the situation that we assessed and that we thought we had. We might also do critical reflective thinking, which is examining specifically that relationship between the kind of thinking that we did and the decision to implement a certain action. That we might spend extra time on the decision that we spend in that situation, right? And this is why learning to look through a coach's eye is so critical, that if you survive the action that you took in the situation you found yourself, you have an opportunity to learn in all of these different choice points. And so being a critical thinker and then being a critical reflective thinker allows you to examine all of the elements that go into your thought process. One of the characteristics of professional thinking is this eye chart. Looks like a dog's breakfast, but what I want you to think about here is the idea of a decision-making process, that decision to put things into action. And at some point, we're going to realize that there is a time compression going on in which extra thinking is not helping the team, that when you get down to crunch time, that too much thinking under time compression is like paralysis by analysis. And so what we want to do is we want to respect the fact that the amount of time that we have left before we have to take a decision influences the kind of thinking that we do. And so when we are the most unconstrained, we can be examining the possibilities of what we might decide to do and engage an expansive, divergent, creative thinking process. At the same time, we might also be engaged in some critical thinking about that creativity. And so there is a bridge between the creative thinking that we're doing and then the critical thinking about that that allows us to, this is like convergent thinking, allows us to start thinking about these creative ideas that we're looking for value. So if creative thinking is considering possibilities, then critical thinking is looking at the considerations about that creativity. The next stage that we go through is as we start getting closer to a time decision, we turn that combination of creative and critical thinking into what we call design thinking, in which case we're trying to actually find a value add decision that allows us to exploit the insights that come from both creative and critical. If there were no time pressure, we could continue to be creative and critical as much as we wanted, but in the urgency to get to a solution in time to take advantage of it, we start constraining ourselves with design thinking because we're actually recognizing that there is this little time funnel getting ready to happen that's going to drive us towards a decision. And so we try to be as expansive as possible, but we have definite motives in mind and criteria. And then as we start getting closer and closer to decision making, we start ruling out maybe the riskier propositions, we enter what we think of as paradigmatic thinking or professional thinking, in which standard rules of risk and reward and management and experience and battle drill take over. That as we reduce the time available, we want to rely more and more on these professional norms. And we think of the collection of those professional norms as paradigm thinking or paradigmatic thinking. Finally, when time compression gets to its maximum, we are in the mode of reactive thinking or satisficing, where what we're trying to do is come up with something that is good enough and allows us to survive and take advantage of our ability to act decisively without a lot of extra thinking. Hopefully we've done all of that extra thinking and chosen from among all the good possibilities in phases 1 through 6. And so when we are left with reactive thinking, we are simply responding to environmental cues, which is a very good survival response to a dangerous world. Now, if we can come out of that time compression still alive, we can, and the time pressure begins to relax a little bit, we might be able to expand back into paradigmatic thinking, considering other well-tested battle drills that allow us to select from a number, and maybe a small number of patterns. This is where I think of the chain trading in this chain between 6, 7, and 8, that if we've got these battle drills that are battle tested and proven through time, and we have confidence and we can execute and we're well prepared and well rehearsed, then we can continue to operate in that channel between 6, 7, and 8 very effectively, as long as we remain in the 0 state and we have respect for time, will, pattern, and money. If that relaxes, we can begin to start adding creativity and critical thinking, and maybe we enter that world by doing some more design thinking and thinking about extensions of our battle drills and looking at other ways we might revise and extend or add to our array of proven battle drills. And that's going to get us right back into the world of critical thinking and creative thinking collectively. And so what's important to notice here is that we can be doing continuous creative thinking, either in our own head or if we're a member of a team. We can do continuous creative thinking, continuous critical thinking with one part of our brain, while we're still concentrating on executing properly at 7. So we can be simultaneously doing what I think of as 12, 13, and 14, that even under time compression, we can offload some of those other functions and not allow them to get in the way of effective decision-making under pressure, but we can be gathering that information and working to improve once we come out of that time compression funnel. So at the end of the day, we are concerned about results over the long term, and we can subject those large data sets to analysis and study and look for in evidence. We can look for the kinds of things that will help us improve our processes, and that's going to allow us to use all of these modes of thinking, but especially the creative thinking, the design thinking, the critical thinking. And as we do those things and they prove themselves to be successful, we can use the design thinking to expand the array of paradigmatic thinking. And that's how we think about adding to our battle drills, adding patterns as we go, refining our understanding of those things, reducing the battle drills down to those essentials that we need in order to execute, but also remaining open to the possibility of growing by learning. And so this whole decision-making process incorporates all of these elements of professional thinking. And that's what we mean by this diagram here. The professional thinking is really the paradigmatic thinking. The creative thinking, and I would add critical thinking in there, is that expansive form. And then the no thinking is that kind of reactive or satisficing thinking, where we're responding to environmental cues in an effective, risk-managed way. Then when we bring the critical thinking back into play, this is where we can test our assumptions and examine our evidence and explore the different rules. So so critical thinking is an essential part of this, but it's not the only thing that we do. We still have to have these other elements of the right kind of thinking at the right time, and do them in such a way that we're not harming our ability to trade. So in my view, the 0 state consists of being able to get into this reactive thinking and satisficing, and be very efficient and effective in the trading that we're doing during execution, but then during analysis and reflection and the coaching, out here 8, 9, 10, 11, and so on, that's where we're doing the analysis of game film to improve our performance. So I wanted to share that with you. Now, finally, what I would say is this diagram talks about how the mastermind effect allows us to work inside this collaborative space in the chat room and these Zoom meetings and these coaching sessions that we're doing, where we're getting multiple points of view about the trading that we're doing, and that individuals can then be figuring out how to take that information from the collective learning and bringing it into their own particular sphere of operation or their own particular trading plan, and lead that towards refining your own personal trading plan. So this is the combination of collaborative learning, group learning, and individual application. And that's what we're going to do when we're in the research weekend and the coaching sessions that we do there. Okay. So I just wanted to share some of those ideas with you as we go. Okay. All right, let's jump to today's work. All right, so we have today was a smaller range day, had some doji-like qualities in that the open and the close were close to each other, but it's useful to note that both the open and the close were above yesterday's close and above yesterday's high. So even though it had doji-like qualities, I really treat this as a pretty strong move up. The fact that it pushed to a new 10-day high and a new 30-day high on relatively low range is a very favorable thing. So as soon as it breaks above that, still going to be long and strong. You'll notice that the 3-period haul is still strong. The RL30 extension is pointing to the way north. The PSAR flip, which happened 15 days ago, still marching right along and pointing the way higher. We've left the, this is almost, here's the SSC. There's an owl right here because you had the harsh winter. You had the P1. The P1 occurs here. It entered the river. It left the river. You had the PSAR flip. So that's the SSC right here. There's your SSC. And then at this, in this bar, you have the dragon finally sloping up, and you have the RL30 sloping up as well. And so that makes this bar, this breakout bar, where it crossed the Bollinger Band mean, crucial. That's the owl entry, and that's the owl move. And as we saw this weekend, that's about a 3R. That's about a 3R gain on a swing trade. Where would I have my stop on this one? For me, here are some choices. There's a strong argument for the 1-bar low at about 458-ish, I might say. Why would you want to give back more than that? Edge of the dragon at about 457, maybe a 2-bar low. Southern skin of the dragon at about 454. The Z1 at 453. Here's the 10-bar or the 10-day low at 451. I don't see how you give back more than that. The PSAR flip for today is at about 449. Tomorrow, that's going to be where the 10-bar low was at 451. And then looking back, here's your Bollinger Band mean. This line here is your 5% sell-off. And then from there, if you're still in, then you're not really a swing trader. That's kind of a hope and a prayer. Like I couldn't justify sticking around all the way down here to a 5% sell-off. If you listen to the pundits who want you to stay in and never get out, they say a 10% sell-off is the beginning of a correction, that everything else is noise. So here is the 7.5% sell-off all the way down here. So here's the 5% sell-off. Here's the 2.5% sell-off. And so to me, I don't see how you stick around longer than, like a 10-day low. That would be here. To me, the bottom of the dragon is reasonable. For me, I'm looking at a 1-bar low because I know how to re-enter. Not afraid. And I would be a tactical trader, intraday short positions all the way down, I think, to about the PSAR. I would start picking up a short side bias, I think, right about the PSAR. I think that's where I start picking up the short side bias. Tactical trading otherwise. And then by the time, if it were to cross below the Bollinger Band mean, I would want to have, 2 positions on the short side by that point. Yeah. And then probably 3 positions if it broke below the 5% sell-off. All right. Let me know if that was helpful in the chat. All right, so the S&P was up 0.17 today. Diamonds were a little better at 0.25. The Qs slightly better at 0.34. Emerging markets at 0.79. Treasuries were off 0.85 to close just above 146. Yeah, 146 and a half, I should say. And then the big winner today was the Russell. It was just massively good. Go back and look at our discussion this weekend for a 2.6% as the small caps came roaring back in a strong way today. The sectors that were better today. You have materials 0.2. You had lithium 0.27. You had lumber, oil, and blended commodities like 0.75. You had agriculture, the other lumber at 1.42. Brazil 1.6. Energy and the FANGs and consumer discretionary, commercial real estate, marijuana, and blockchain. So very broad-based strength today. So this was divergent winners. The indexes were not all that violently good, but there's a ton of different winners all getting hit hard today. So this was folks buying their favorites while the market was refusing to fail. You have oil exploration at 3%, ARC innovation and genomics at 3.17. You have S&P bio 3.8, moonshots 3.85, clean energy 4.3, and then it just refuses to lose. Tesla 8.5% to close above 1,200. We framed that one out this weekend and said you could still get on board with measured risk, and that was what we're going to see some of that today. John Deere and Devon Energy, 4.8. Yeah, Ken H asked, was this a monthly rotation effect? Yeah, could be. You know, this could be, new month buying, which is why you would expect a lot of those things to get hit with gains. That's not unusual. Some of our research weekend, you'll remember, Ken, on those, I was taking a look at how to front run some of that in the last couple days of a month to find the ones that had underperformed the most and to position there, thinking that that would be normal. Monthly rebalancing might be occurring later, and that could be an explanation of that effect. Is that a short-term effect? Well, when it is short-term, it usually lasts about the first 3 days of the month, our research shows. So you got to be prepared to take that benefit while you can. So we'll be monitoring that for short-term. Have Coinbase 3.6. Alcoa 1.7, TX, the steel company, 1.5. All right, so the underperformers, there weren't that many of them today. Mostly everything was getting bought. So we had consumer staples was underperformed a little bit. Finance, S&P Tech, Mexico, minus 0.33. You had, let's see, wheat and precious metals and VXX off 1.5. The Bitcoin futures, blended large cap crypto, and then some of the, the individual companies. So there was not much in terms of sectors that underperformed today. It was mostly just individual companies. So you have Cliff and US Steel underperformed like 2.7. Bitcoin, Microsoft, PayPal, Apple, Ethereum, Robinhood, all kind of in the red. But other than that, that's mostly good news all day today. And even the ones that failed had some intraday moves that were tradable. All right. Just some areas to look at. Just taking a look at Facebook, the weekly. Perfectly placed, increased interest. The last couple times there were these little dojis at the end of a sell-off. So let's be ready for that. From this weekend's, we talked about this one at the end of the session last night. ICLN is that clean energy, and we talked about buying the breakout from that two bar high. And if you did that today, you're well in the money already with a 2% gain that closed very, very well. We had said if it failed, then we'd be looking for a target down here, but otherwise it was sort of unlimited upside. And that's kind of what we got out of that critical state was the entry in here and solid follow through. We had also framed the Russell, and this is on a daily, and we identified this sideways resistance level. And what we got was a slight gap up and did nothing but crush for 2.5%, pushing Z3. And now it is well and truly clear of all the previous resistance, and the fair value is in sight at 239. So that's pretty good. So opportunity trading based on those trade frames is essential. All right, let's take a look at the guys, see what we got. Trying to remember who all put this in there today. Let's see, the first one. First one is Matthew. EWC. Okay, so large gap up. He gets the like about a 3-bar entry. It rolls over pretty fast. A excellent exit at minus 0.2. Here was when it recrosses the VWAP. That's an indication of a possibility. Yeah, so I might have gotten this one and would have sold off here. I would have taken that loss too, but keep firing. That's a nice one, and you actually get a Kata 2 move here as well. This one is reasonable. That is that's an emerging dragon because it is above the RL10. So that's this is an emerging dragon effort. Nothing wrong with that. That's a great exit. I'd like you to maybe get this a little sooner, but I don't mind that as a short side trade on the where it's like a collapsing dragon below this belly. And as it's crossing the VWAP, I think that's a very good entry. Great capital preservation. Now, this is where I think if check your emotional bank account. Can you get back into the zero state? Because now what you have, if you just keep firing with the patterns, here's a high, here's a lower high, and this is where it crosses the VWAP. That's a collapsing dragon. Our number one pattern, smash, and either a second position or a re-entry probably. There's a win. And now that sets up SSC with a PSAR flip. You'll get paid in here. And then on this one where you get a low and then a higher low, that makes this Kata 2. And then, so your entry is here, your second entry here. That makes this a third entry. And I would probably take that exit and then re-enter and probably scratch. But there's 3 big entries on what should be a massive gain. So there's this big move and that big move, and I come back to this zero state. So the essence of chain trading is having a large emotional bank account. You know, that's your E, your emotional bank account that you can draw upon to keep going. Just remember, all of these trades are just the next trade in a series of 1,000 trades in the future. And so we want to cultivate that strength. Continuing, we're back in the zero state, I think, by this time. That was well done. This is your Kata 2 re-entry. This is a Z3 pinch breakout. And that's basically a new high of the day as well. So I love that. But we could also get this one. So that's a nice entry. Maybe a little slow, but that's not bad. Then a good short, good scratch. That's where your Kata 2 is. And then that makes this a win instead of a scratch. So lots of good work being done in there. And I think the lesson of this one is the emotional bank account in order to support chain trading and keep going. Okay. So really good work, Matthew. Patterns are coming together. All right, here's a Tesla. Probably a 1, 2, 3 developing. Now notice the super pinch. You have the RL270, the 90, the 30, and the 10 all inside this tight pinch. So he takes the Z2 breakout with a tight wrist box, gets a second position, takes the sniper exit and a reentry. So there's 2.5 and there's 3.5. So that's 6. And that's even missing this possible reentry here or second position. Beautiful 1, 2, 3 exit. Notice how appropriate that is because of the breakout above the Z3. All right. Let me get that a little closer just to show you how good that is. So when, he notices, there could have been a COTA 2, but when you get that kind of last minute run up and then it rolls over, that makes a 1, 2, 3 exit wonderful instead of waiting for that to come all the way back down here for the sniper. There's even, I don't want to get short Tesla. If you're Michael Burry, you're remembering that. This is a nice effort on a COTA 2 reentry. Great scratch. Another nice effort. And he keeps firing. I just want you to notice, keeps firing, gets one in on the SSC, gets a second position as it's getting ready to front run that Z3 breakout. It doesn't work, so he's immediately out and locks in 1.5 and gets another fractional. So that's just nice work. This is 6R all the way through here. Couple fractionals, and then 1.5 pays for both of those fractional losses. So that's 6R intraday, no overnight risk in Tesla in this trade. Pretty nice work. Yeah, and I don't know if I could say it better myself. Wow. In those last 30 minutes. You think that's going to rock tomorrow? Yeah, it could also be that kind of parabolic move that closes at the top with a big gap off and then a roll back down. So whatever that gap is tomorrow in Tesla, watch to see if it gaps up and then comes down and doesn't close the gap and starts to resume, that's where your COTA 2 can get back on board intraday. Worth trading 10 shares just to try it out. But really nice work from Ken H on that one. TNA. So this is the triple Russ. Oh no, I'm sorry. This is Alcoa. And thanks to Chi Wing Chong for yesterday's trade frame. He gets the sell-off morning hook. SSC, 25-cent risk, 1 position, 2 position. It runs up, rolls over, gets a fractional, gets a reentry, takes a fractional loss. Try a little slow on the SSC, takes a good loss. Probably with 2 losses in a row, he does not take what in retrospect is the obvious COTA 2 or SSC. He waits for the Z3 pinch. He gets a fractional. So there was the trade that was not taken. Here's another COTA 2. There's the beauty on the short side. Here's where it crosses the Z3 pinch. There's your collapsing dragon. When you draw this line across here, collapsing dragon. Second position when it crosses the VWAP. Very nice SSC, and you got what was available. So pretty nice work in there. Getting paid. Here's TNA. This is the triple. This is 3 times IWM. So here's the gap up. He gets like a 1, 2, 3, 4, 5 minute breakout long. Gets paid. Check for an R. Kata 2 reentry. Check. Second position, tight scratch, 1.5. Kata 2 reentry, scratch. Kata 2 was available. That would have been probably the best trade of the morning. Good scratch, couple more opportunities. So still good work in there. That's about 2.5 R altogether. CLF from Luke. Oops. How did I do that? Yeah, if you guys aren't using the Brave browser, you should be. That's very nice security. So Luke is continuing to beaver away, working hard. He's approaching 1,000 trades. He's going to be showing his research paper, his histogram, so we can do some analysis here. He's on the clock. He clocks in at 5.3 R today. Z3 pinch, breakdown, collapsing dragon. Again, slow on the exit. You're down here around Z3. And so now you have bar 1, bar 2, a 1, 2, 3 exit would be here. I'd rather see that. And then this becomes the entry instead of this. And so your 0.3 would then be a 0.5. And you get that far, you're almost at Z2, 1, 2, 3 exit here instead of here. So there's probably another 0.5 that was available inside here. But this is just brilliant work. You have the high, the lower high, it crosses the VWAP, and then he crushes it here with the second position. That's still a pretty good exit out of all of that. You might have had that as a money management stop, so you don't even take the 0.3 on that. Good effort. This is a stop and reverse, gets paid 0.7, gets a fractional win. Here's the beauty. That's the one I love. Again, same pattern. It rejects the VWAP, lower high. He crushes it with a tight stop, second position, and beautiful cover for 3.1. Nice work. 5R. Keep grinding. All right, let's see what we got here. All right, here's some this is the triple tech, the triple NASDAQ. Here's an SSC with a stop here, which probably scratches with a supported summer crossing here when it holds and then takes off. And even if you wait to take out the emerging dragon entry with the stop here, that gets really well paid. You probably get that trade with an exit there. But a beautiful short, good second position, reasonable exit, except I just think I don't want to give back 0.8 on that. I think if you use the standard position size, see how wide that box was? when you have that second position on, I don't think you want that tight. I don't think you want that tight. I think you want to use the standard position size. This was a good effort at the long side. Great scratch. Here was an SSC, but that's really good. That's really good. That's really good. And a great exit. And that's 8.5R on just on that trade sequence. Here's 1R. And here's, we didn't take that one. So yeah, so that's probably 10, somewhere in the neighborhood of 10R on that one. Pretty nice work. And we framed that one up yesterday as well in the nightly session. Some more work on Tesla. I think a good micro loss, brilliant Kata 2, second position, exit to lock in 3. So that's minus 0.3. So when you are aligned with the market, you're large. When you're not aligned with the market, it's small. Very good. Here's a micro gain, a nice reentry. You got what was available. A nice reentry for 1.3 and 0.7. So that's another 1.5. And those two together give you 0.7. So this cancels that one. So now you get 3.7, 1 point. You're at about 5.2 right now. Here's a Z3 pinch and a breakout and a Kata 2 and a Kata 2. Still, that's 5 and no overnight risk. Really nice work, fellas, all the way across the board. Oh, there it was. I was looking for my markup. All right, let's jump to the daily. That looks like we have a few new folks today. So again, these in the blue, these are the primaries where we're getting the primary signals for developing plans. The second set of pages, additional levels of research, into more fundamental conditions, I suppose. We've seen the daily. Bullish normal, still well overbought. Strong upward. What is it giving me? I don't know. All right, so we're getting a bit of a rollover here. Why is this not giving me? Yeah, the risk Z starting to roll over. We have the Dow, McDonald's, Coke, Walmart, Chevron in the min pains, the max pains, IBM and Intel still giving us possibilities. Brazil showing some weakness. We're so close that we pushed to new 10-day highs, so you're not going to get channeling and overreaction signals whatsoever. Lots of dojis today as the S&P was topping off near the top. Still quite a few reasonable auto framers available. McDonald's was a big winner today. DuPont, ExxonMobil, Boeing. In the ETFs, lots of dojis today. A good number of auto framers testing out well, including emerging markets, Brazil, Latin America, and silver. Notice the strength in energy. Clean energy was a % winner today, so was oil exploration. So energy may have some juice for tomorrow. In the auto framer, I like Intel and IBM, of course. I like Brazil, emerging markets, high volume, large indexes, and the large cap techs that have been vulnerable. I mean, they're still 9 and 6 to 1 with reasonable risks, reasonable manageable risks. In the daily squeezes, look how when the S&P is near the top of that stack, that's really a good thing. And diamonds and tech up there. So that market is poised for a strong move in either direction. That's what that means. So, and that can be in either direction. Still being dominated by the summer. That's all good. And then notice the ETFs that had the great big strong moves today. And even energy and oil exploration joined the play. Mexico kind of all by itself here. Mexico and treasuries in the weak areas. The Dow 30 and McDonald's, ExxonMobil, Goldman Sachs in the green, Boeing in the green, and Intel making up for some lost time here. Pushing to new highs, but it ended in a doji today, so I'm a little concerned, especially as the slope of that 30 is outside of the range of normal, and it almost feels a little bit like it's topping. So this feels almost like topping action here in the RL30. So that nice move from here to here is reflected in that the turning point in the RL30. And this is where that next turning point could be happening. And so you see this to here, that move reflected this kind of sideways chop. After a nice run up, you get this sideways chop. So it would not surprise me to see some weakness developing at this price level here. Okay. All right. That's everything we got. We'll get this published and posted. Really good work today from the guys. Keep working hard. And I hope you guys enjoyed that little bit up front about the, professional thinking and professional development that's going into the systems thinking and coaching workshop that we're putting together. And again, heads up on the that research weekend and the live trading compendium. There's just some amazing stuff inside there, and early bird adopters are going to get a really nice price on that if they take advantage of the first couple of weeks of the special pricing. So keep your eye open for that. Okay. All right, that's everything I got for you today, guys. Well done. And we shall see you tomorrow.